Good morning, everybody. It's the 18th of May. We are Signal Centre Talking Bull. I'm Joe, joined by Steve and Jamie, as always. Good morning, gentlemen.
Good morning.
Morning.
How are we doing today?
Yeah, very good. Thank you.
Good. Superb. Right, let's get stuck into the latest headlines and what's moving markets this morning. So first of all, we had some solid US retail sales data yesterday. The sales increased 0.9% for April after an upwardly revised 1.4 increase the previous month. So this was in line with market expectations, which is obviously good. So showing that the economy at the moment, certainly on the retail side of things, is looking pretty robust. We also had Fed Chair Powell speak yesterday. He stated that the central bank knows that this is the time for a laser-focused approach on bringing inflation down and creating ongoing rate increases as appropriate, with a broad consensus that the committee will do a 50 basis point increase in the next couple of meetings. Powell also expressed a high degree of uncertainty, especially given the Ukraine war. The comments overall were relatively hawkish, reinforcing rate hikes to 2% by late July. We had the US yields move higher as well yesterday. During his speech, we saw the 10-year yield move back to near 3%. The ECB continued also with their hawkish rhetoric. The ECB council member Nott stated that the monetary policy needs to be normalised and that the 25 basis point increase is realistic for the July meeting. He also added that a 50 basis point increase should not be excluded if the data suggests that inflation is broadening. We've continued to see more short covering in euro and sterling after some really heavy selling pressure over the last few weeks. We saw a bit of relief in those areas in the market. And this morning at 7 a.m. UK, we had the latest read on inflation. The headline UK CPI rate surged to 9% for April from 7% previously, which is the highest reading since 1982. The primary influence was the jump in retail energy prices, with fuel prices also a key element. The underlying rate met the expectations at 6.2% from 5.7% previously, but the headline rate was marginally below the consensus forecast. The forecast was actually for 9.1%, so maybe a sign that we're starting to see a little bit of a peak there, but I wouldn't hold your breath. So let's get stuck into some charts. Steve, you're going to kick us off today.
Yeah, I sure will. Let's look at the Bitcoin, the weekly chart. Let me share my screen. Oh, there we go. Yeah, still sort of like a bit concerning this basically potential double top, maybe even a head and shoulders formation that we're forming here. It looks a bit messy on the weekly chart. So I'll try and, well, I don't really want to get rid of much, but the one to look at is this week's chart. This candle on the right. We are really testing this support line. Now, the end of the week will be Sunday for Bitcoin, and it's really under pressure. Over the last couple of days, we've seen a bit of a reversal. We saw a bearish engulfing candle here, 16th yesterday, inside day. Not really a lot going on, and today we've seen some more negativity, and you can see on the right hand side here, most of the coins down at least 2%, some even more than that. Ethereum following the same sort of price action as Bitcoin. Definitely concerns still out there over stable coins as well, like Tether. Me and Joe were talking about it just before the show started, as to whether that'll be another play. A lot of the bigger sort of like the funds, the global trading funds will be looking at any types of weaknesses and maybe trying to take advantage of that, as we saw with Luna and Terra last week. That's still worth zippity doodah, and wouldn't touch that with a barge pole. Over to commodities, taking a look at where gold is. Gold had tried to sort of like rally, got up to 1836 yesterday before reversing quite sharply. A little bit of a shooting star type candle forming here. Normally shooting stars appear at the top of the trend, so this is similar sort of price action. The bulls attempted to regain control of the market. They ran into the resistance, which was previous support, around 18.34. We had that and gave up that play and reversed sharply lower by the end of the day. On the 4-hour chart, we've still got this head and shoulders formation playing out. It's hit another the support level really that we're challenging next is around about 1790. Below that, we've got the measured move from this formation here down at 1723, which isn't beyond the realms of possibility. The stronger dollar definitely impacting on gold prices at the moment. So looking at a bit more shorter term, really we can see here how price action reacted. We formed an evening doji star, evening doji star formation, and it's more of a hanging man candle really rather than the star, and prices reversed in this nice 3 candle pattern here. So yeah, that's the resistance 1835, support down at 1787. And definitely looking, it's actually stalling around where we are now in front of the 1800. That'll be a psychological support as well, and maybe a chance to sell into any strength that we see in gold. On the oil side of things, price action was a bit indecisive yesterday. We have seen a break up through the downward trending resistance line, and we had this store. We got up to 113, just about above $113 before reversing. So a little bit of a temporary pullback potential here, but we're trading around support at 110.35. That was the previous high that we broke through. So that's the level in. The dogs are playing with their squeaky toys. Don't know if you can hear that in the background. 114 is the resistance level in Brent crude oil, and you can see that the disparity between WTI and Brent has really come in. I mean, that was up around $5 even just 6 months ago. So that's really sort of like come in to quite close to parity. It's only 60 cents differential at the moment. And as oil is moving higher, or the trend is higher, that maybe shows a maybe less of a demand for the Brent crude oil. So yeah, interesting to watch that and see how that plays out. Normally WTI trading at a pretty decent discount to Brent. That's it from me.
Nicely done, Steve. Thank you very much. Right, let's move on to FX then, shall we? So starting off with the dollar index, we saw a pretty decent retreat in that yesterday. So 3 consecutive days of selling, as you can see there, and a decent move to the downside yesterday. But overall, I mean, the strength of the trend is still very good indeed. So I've got no doubt that we're going to see higher prices there. So looking really at this level here, which is the short-term uptrend, and also a previous resistance, which may now act as support at 102.98. So looking to see if buyers are here to stay today and how much appetite they've got to potentially drive this higher. Obviously, this has had an impact on anything linked to the US dollar yesterday. So we saw a little bit of relief in euro US dollar. As we said at the outset on the headlines, that may be linked to short covering. Obviously, this has been on a pretty savage trend lower. We found some support around here at 103.54 on euro USD. We've got resistance above at 106.35, so it'll be interesting to see how it acts there. Also interesting to see how this sort of formation that seems to be building over the short term actually plays out. It may be that we're getting some sort of rounded bottom taking shape, and we may see some relief to the upside. And of course, that would mean potentially lower prices on the dollar index. If we take a look at cable, that's been boosted, I think, in anticipation of the inflation number today. We are on the back foot a bit after the print of that number. Again, it could be down to short covering. We did see a move to the downside here. We saw a little bit of a flag formation take shape and then a continuation lower. We've seen a rally into resistance at 125.07. So we'll see if the bulls have got enough in them to continue pushing this higher, but the underlying dollar strength, I think, is going to continue to make things difficult. Just staying on the sterling theme, obviously, because we had this number out today, we saw maybe an interesting pattern forming on sterling Swiss. We've got a decent sort of range forming here. We're at the top end of that range as things stand at the moment. Now that's also into downtrend resistance, so that could be a good candidate for my gun to the head trade a little bit later on when we come to that. But really like what we're seeing here in terms of a range setup, so that could be quite a nice play for today. If we take a look at sterling versus yen, still like the idea of this being a head and shoulders top, but it has overshot the neckline, which can happen occasionally. I think as long as it doesn't take out the right shoulder that we've got on the chart here, then we can still think that this is potentially in play. So it could be, again, an opportunity to sell into this today, expecting a continuation lower following the formation of this head and shoulders top. And that's a similar situation actually across all of the yen pairs, really. We've got Aussie yen here. As we can see, a nice head and shoulders top, rallied into the neckline, but has overshot it. But we're giving some of that back today. So maybe a candidate for selling. Measured move of that top pattern actually is down here at 85.12. So some decent risk reward potentially on offer with that today. Moving on to the indices, let's take a quick look at some of those. Starting off with the DAX. So that actually broke above this downtrend resistance line, which has been capping prices now for a number of months. You have to go back to January for when this down move started. So that could be quite significant. I think I'd like to see it take out a few more horizontal levels before I start getting too excited about this. But we did see a nice bounce from this 61.8% fib level here, and that sparked a decent move to the upside. So we do have multiple resistance levels above, so it has still got a fair amount of work to do, but this is quite an encouraging sign that we've taken out this resistance today. If we take a look at the NASDAQ, we can see that had a decent bounce from this 50% fib level, pretty much nailed it to the tick, and we've seen a continued move higher. We've got some resistance now above at this sort of zone, which is at 12,923. So tech has been the big underperformer. So we'll have to wait and see whether or not there is any increased appetite for risk, or whether or not this is just a bear market bounce. I would prefer, I think, that setup, to be honest. I think there's still a lot that needs to be done to recover this situation, given the sort of big rounding top that we have on the NASDAQ at the minute. So for me, it may just be a bit of a bear market rally as things stand. Looking at the S&P, we drew this on earlier in the week. Big head and shoulders top pattern on the daily chart. We've got a neckline here on the horizontal sort of setup. I mean, the neckline was a downward sloping one, but I don't tend to trust those ones as much. I know they can be a lot more aggressive when they play out and can be quite good, but I always prefer these horizontal levels. So I'm targeting this 4107 level as a potential area where I expect there to be some resistance and for the sellers to potentially step back in here. But it has been a pretty decent move off of the lows. But overall, I can't ignore this big dark cloud over the market, which is this head and shoulders top. So I'm going to leave it there on the indices, and I'm going to chuck it over to Jamie, who can talk us through some stocks.
Thanks very much, Joe. We'll dive in with our gainer and loser of the day. The gainer being this, which is Talaris Therapeutics, up 35.93% on the day. Our loser of the day, and this really is a big loser, down 65.2% is AutoWeb. A huge gap down, so not having a fun time there. It wasn't quite a nice little range channel, broke through, and then on the most recent earnings, it's just kind of fallen to the floor. So not a happy time. We can do something a little bit different today. So I'm going to jump into a couple of the stocks we usually do, but I've also picked out a few that have interesting levels. But we'll start off with a couple of the main ones. AMC is coming up back to this previous support level, this resistance level. It's actually already tagged it once back on the 12th of May. It spiked up and sold off quite quickly, but we're approaching it again. So looking perhaps to find some sellers waiting there at about $14. Tilray, I think, is the same kind of story. Yeah, so we're this previous support level here. We're back into it. It's just about 5.10. We're looking at there, so perhaps more sellers, and especially for something like Tilray, which we've had this very aggressive downtrend. And like I say, I lost all of my my chart annotations recently, so I'm having a fun time drawing them back on. But we've been in this this channel down recently. Well, not recently, it's probably been for the last year or so. So these key levels on the short side are probably ones I trust more. I mean, if we come down to a support level in a downtrend, I want to see more from a stock. But when you're in that downtrend, you can kind of have that bearish bias when looking for an idea. There wasn't too much more, I don't think, that I absolutely loved, honestly. Again, I think because of the volatility we had over the last few weeks, it's been a bit quiet to start this week. There's not been too much. It's been a lot of kind of mild upward days, bullish days for a lot of these big stocks. So we'll jump into the stocks that I think are interesting levels. First of all, I had a look this morning. I found this one. This is PBT. And we've had this quite considerable uptrend back since November of 2020. We've had this consolidation here now, and it looks like it's ready to break out of this consolidation pattern we've seen, with the support being at 11.30 and the resistance being about 14.30. What I like about this, two things that I look for the breakout potential to the upside. One, we're already in uptrend, so it's just a continuation. So that's a good check in the box. And the second part is, you can see where I've drawn this blue line here. We were ranging quite well. I mean, we bounced off each level about 4 times. But after it bounced off this resistance level here, it failed to get back down to the support, which suggests to me that the buyers are coming in at an earlier level. They don't want to just get in at 11.30. They're looking at this 12.13 level to get back in. And we're right there with some really good volume actually yesterday. For this stock, it looks like we've got earnings coming up on the 1st of June, and that could be a catalyst to break it through. So an interesting level there for PBT. We'll check a couple more. This is DWAC. This is what was this? Was this Donald Trump's one? I may be wrong. He did something with this, didn't he? I can't really remember the whole story behind that. But yeah, we had this big spike up back in October. Since then, it's kind of been quite range bound, but a similar story, but the reverse now. So we're now seeing the sellers come in at an earlier level, selling this down back towards the 37 support level we've seen tested back in December, in April, and then again in middle of May. So an interesting one here. It's certainly one to keep an eye on. There's a lot of volume on this stock, kind of trading over 1 million shares a day. So keep an eye on that. And lastly, we'll finish with this, which again is what's it called? Magnolia Oil and Gas. We've kind of got a channel within a channel here, which is quite interesting. But the more recent price action suggests that this could be turning around, or at least kind of correcting a bit more. We have this trend line support, this blue line here, the bottom one, which has been tagged once, twice, and then a third time. So that's a valid trend line. It's been tagged 3 times. But within this, we also have this channel here with this shorter blue line and this red line we've got here, which price has been ranging between. But in more recent weeks, price has been struggling to keep hold of this shorter blue trend line I've got here, and it's retested the longer one, which suggests to me that there could be the sellers are coming in earlier here, and that the buyers are running out of steam a little bit. Obviously, we're still in an uptrend, so you have to wait for a bit more of a turnaround than just this. But I think technically this looks like it might be running out of steam a bit here. So we'll be keeping an eye on this for a slight retracement. We've obviously had a really good run on this particular stock since, really November of 2020, where it's down at $4, all the way up to 24 now. But it looks like this could be slowing down a bit. And we'll leave it there on the stocks today.
Nice one, Jamie.
Thank you, Jamie. Okay, so let's take a look at, very briefly, our gun to the head trades, because it wasn't a particularly good day yesterday. Just to reiterate, yeah, I know, just to reiterate what we do here. So this is a segment in the video that we do each day where we pick a trade idea live on the video. Each of us must pick a trade with a stop and a target. All the ideas are placed at market. We cut these ideas off at 9 p.m. UK time, or when the stop or the target is hit. And we've been maintaining performance spreadsheets on this for some time now. This is the 608th edition of this show. So there's a fair amount of data now that we've collected doing this. This is how it looks overall. We've got the performance chart down here. As you can see, it's been a bit wobbly, as you'd expect, because we are just effectively making this up as we go along with a gun to our head, essentially. So we've got to make a call pretty quickly. We've been on a decent-ish run of late, but in the last few sessions, we've seen a little bit of a move to the downside. I think maybe a market conditions not helping us with these ideas, but they are risky to say the least. So overall, we're doing pretty well. Win rates around, on average, 42%. Yesterday, we did 3 trades on, what did we do? I think I was on Euro dollar. Steve, you were on NASDAQ, and Jamie, you went short of copper. All 3, unfortunately, were stopped out. So if you followed those or have been following us for the last few videos, sadly, we haven't done too great, but these things happen. These are the standard sort of ebbs and flows of the market, I suppose. So we've got a fresh opportunity today to try and put that right. Who's going to come up with the goods today?
Me.
Go on then.
I'm going to sell Bitcoin. Just basically looking at that.
Do you want to get rid of all our viewers already?
Well, I'm just a little bit. I'm pretty nervous for the people who actually own Bitcoin. Obviously, I've been for a long while, and I continue to be nervous. There's no real, doesn't seem to be any real life in these rallies at the moment. And with the issues around stablecoin, I think this is going to continue. And we've seen this bearish engulfing from, I think it was Monday. And a bit of an indecisive day yesterday, although slightly positive, but we've given all those gains back already today. Breaking it down to the hourly chart, I think really we could sort of like class resistance around, short-term resistance definitely around this level. There we go, 31,411. So my stop will be placed above that. Getting short here and targeting a move to 25,845, which is just close to where we spiked down to on the 12th of May at 8 o'clock when we got down to 25,401. So 400 points in front of that. My stop is 400 points above the resistance. So let's see if I can capture a little bit of return on the basis of that today. Selling Bitcoin 29,818, stop at 31,818 and targeting 25,818. That's me.
Hey, Jamie, have you got one ready?
I do, but I had this drawn up a good 10 minutes ago, my Ethereum short, and I feel now that we're just both going to lose if I go through with it.
Do you feel that?
Because
I've done something, you feel that you're going to lose?
He thinks that because Steve's done this trade.
What's that type of mentality called? I can't remember what that's called. Doom and gloom. I don't know, something bias. I'll try and find out.
It's the problem I have is I think the last 3 times we've either all shorted indices or all shorted a coin or something that they haven't worked out, and it's just kind of.
I mean, we could game the system. Obviously, we could all, start picking longs and shorts in the same asset classes that are highly correlated, but that's the jeopardy of the game, isn't it? We're just picking what we see and what we're seeing on the charts.
It is, and I'm seeing the same thing as you here, Steve. We obviously had this bounce back on the 12th of May after the big sell-off, but I'm not convinced by it at all. And while this looks a bit messy, we have what I consider potentially a flag forming, a bearish flag. But what we've seen in the more recent hours, and this is a 1-hour chart, is price struggling to get back to the top end of that flag, which suggests to me there could be a break coming. I'd rather not preempt it, but this is the aim of the game. You've got to buy or sell at market price. So I'm going to attempt to sell Ethereum at current price, which is 2026. I'm going to put my take profit at 1783 and keep my stop just above this recent high at 2116. So that gives me a 2.7 risk reward selling Ethereum today.
Okay, best of luck, Jamie.
Makes me think about one of the little puzzles that I posed to my friends the other week. So if I gave you 100 doors and said to you behind one of them's a Ferrari and allowed you to pick one, which number door would you pick? 1 to 100.
I'd go 1.
You'd go 1, Jamie?
I would not. I'll go 13.
I knew you'd go 13. That wasn't the trick. So if I then said to you, so your chances of winning basically 100 to 1. So then if I said to you, I took away 98 of the doors and left you with your numbered door and one other door, would you change your mind and pick the other door?
Yes.
Well done, Joe. Jamie?
Oh, you said well done. I was going to say no.
Yeah, I knew you'd
Yeah.
say no. People get sort of,
Yeah.
it's a bias people have. They sort of like, and again, I'll look it up what it is. But yeah, your odds now, I've given you, you had odds of 100 to 1. You picked a door. I've now given you odds of 2 to 1, and you haven't picked the other door, because the odds of you picking the right door were 1 in 100. Now, if you change your mind, the odds are 1 in 2. So
Right.
you should change your mind every time, and over time you would get it right more often than not. There you go.
Okay.
Oh, interesting.
Thanks.
It was door number 13 actually. The Ferrari was behind, so
Oh.
you would have messed up there if you had changed it. But that's only a 1 in 100 chance.
Okay.
Nice, I like that.
Right, finally, I've got my trade to get out here, which is sterling Swiss. So I talked about this in the FX roundup. So this was how it was looking on the daily chart. Highlighted that it was trading in a range, as you can see here, which we've got highlighted on the chart, and also into some downtrend resistance as well. That blue line, which dates all the way back to this move here, which is back in April 2021. So for me, looks to be a pretty interesting setup today. This is what I've done with the trade actually on a 4-hour chart. So I'm selling at the current price of 123.75, and I am targeting a move down to the lower end of the range, which is at 121.12. Now, if I was being super sensible about this, I should have my stop loss above the height of the range, because obviously if it breaks above the range, then it's going to invalidate the setup. But because I'm looking for a big return here and really like the setup, I'm actually going to put the stop a little bit tighter at 124.24. So that's just 50 ticks. So that gives me a risk reward ratio of 5.24 as opposed to only 3. Well, I say only 3, that would still be pretty good if I were to have it above the top of the range. So I'm going to stick with that. And I'm also, in fact, all of us, we're going to publish them to our TradingView profile. So if anybody wants to track the performance of these, see how they've done, see how we've done previously on ideas, then please feel free to do so. That's going to be published right now. So that's my trade of the day.
Nice one.
Very nice.
Okay, data-wise today, we've got a few bits out. Let's just bring that up. So we've got the Canadian consumer prices, so latest read on inflation in Canada. At 3:30, we've got the US EIA oil inventory number, so keep an eye on that if you've got any exposure to oil. And then overnight, we've got the Australian employment report that'll be out at 2:30 a.m. UK time. For the rest of the week, nothing really standing out on the calendar. We've got an Australian general election on Saturday, so that may impact anything linked to Aussie currencies over the weekend. And then next week, we've got the US flash PMI reports, as well as the latest minutes from the Federal Reserve. That is that, I believe, unless anybody wants to add anything further.
No, all good, thanks.
No, good from me.
Superb. Cool. Okay, guys, we'll be back tomorrow morning, and until then, trade safe, everybody.
Cheers.
Goodbye.